Great. Good morning, everyone. Thank you for joining us at our next Business Success webinar. Today we have a great presentation provided by Patrick Zabal. He's our great friend over at Arizona Central Credit Union. We'll talk all about managing your credit during the COVID crisis. So great topic, very timely, of course. If you have any questions, make sure to include your question in the chat. We'll be answering questions a little towards the end of the webinar, as well as if you have any questions after that, we'll be sharing Patrick's contact information in our post-event email that you'll be receiving after the webinar, along with the recording. If you notice there, you'll see that it's being recorded. So if you miss any moment of it, you'll be receiving that soon. So with that, I'd like to welcome Patrick to kick off our webinar for today and appreciate it. Thank you so much.
Greetings, everyone. Welcome to our business and personal workshop here. My name is Patrick Zabal, and I'm the Partner Alliance Officer for Arizona Central Credit Union. Today, we're going to be discussing personal and business credit and how they both work. I feel like this information is incredibly valuable, potentially saving you or your business hundreds of thousands of dollars over a lifetime. So I want to thank the Arizona Hispanic Chamber of Commerce and Ascend Phoenix for giving me the opportunity to provide this to our community. I also have to say that none of what I discussed today should be construed as business, legal, or liability advice, since I'm not a professional legal or liability advisor. So with that, let's get started. So, can bad credit affect your whole life? The short answer is yes. It affects whether or not you can get a checking account. It can affect how much you pay for insurance. It could also be the deciding factor in your next job search. So, but the biggest thing to this is bad credit can only affect your whole life if it stays bad, right? Because nothing on credit is permanent. Even the worst mark that you can have on a credit score, like for instance, a foreclosure or a repossession or anything like that, that only lasts 7 to 10 years on the report. So anyone can recover from any situation on their credit, which I'm going to discuss today on some really good ways to get out of really any situation, right? So let me switch real quick here to this flyer that I'm going to be providing you after this, and scroll down. All right. So this is just something that you can see kind of how credit can affect the cost difference in what you'll pay for a loan or a credit card. So as we can see here, this is on a new auto loan of $20,000. And these rates are made up. This is just like an example of what you can expect. But at a rate of 1.99 with a monthly payment of $350, the total cost ends up being $21,028. And then if we move over to the next bracket here, at just a slightly lower credit score here, 699 to 670, there's a cost difference of nearly $800. And then in the next bracket, there's a cost difference of nearly $2,000. I probably could have made a fourth one here because auto loans, I've seen auto loans go a lot higher than this. Over the last 9 years, I've seen it all, right? I've been able to help people refinance auto loans away from like a 26% annual percentage rate, as an example, transfer the balance of their credit cards away from a rate that was north of 30%, And also I've helped a member close down and refinance a payday loan that was actually nearing 100% interest if you include the fees. And so what I've seen is a lot of people see the credit scoring system as a game, and that they kind of check out of. But you know, if you do see it as a game, then that's okay, because I'm going to show you how to win, so that you never have to be in a situation like the ones that that I just talked about. Because in this scenario, you know, one of those situations would mean, you know, $10,000 difference, right? Where they would be paying like $30,000 or more, like 33,000 on this 20,000 auto, right? So we definitely want to avoid that. So let me flip back to the presentation here. And we just discussed how you can save thousands. So what we'll show you here is how lenders make decisions based on your credit report. And then I'll give you steps to build, rebuild, maintain, and increase your credit score during the coronavirus pandemic. And I'll show you some pitfalls of credit, your consumer rights and responsibilities. And then we'll discuss business credit at the end. Business credit is very similar in some respects and extremely different in others. So I don't really want to mix them, because going back and forth can get a bit confusing. And then of course we'll cover what a score is and how it works. So let's do that now. All right. So for this, I'm going to flip back to that flyer so we can get down to what goes into your credit score here. All right. So this bucket down here, we'll start with the largest one, 30. That is payment history. So it essentially means in the past 7 years, how many times have you been 30 days or more late on a something that reflects on your credit? So it would have to be like, you know, a loan, credit card, something like that would reflect on your credit. So 30 days late is one late payment, and then 60 days is 2, 90 days is 3, and so on and so forth. And essentially, if you don't have any late payments at all and you switch over to having one, then that can affect your score pretty negatively. But if you have like 6 late payments and you get a 7th, it won't affect it as much as getting that first or second, right? And so with this bucket, really all we can do is just pay our bills on time. And this is more of like a compounding over time type of thing. So all we can do here is just forget about the past, you know, focus on the present and the future, and continue paying everything on time. So this, we'll move on to the second one here. Oh, actually on the payment history, after two, oh, didn't mean to flip that. After 2 years, it will affect you less and less. So after like 2 years, a 30-day late payment will start to impact your score less and less and less until it falls off at that 7-year mark, just to let you know. And so the next bucket here, 30% amounts owed. This is actually my favorite to use to improve my my credit score, because it's very malleable, where it can change your score from month to month. Whereas most things on credit, I would say, are more of like a year to year, you know, even decade to decade thing. This can drastically improve your score. So what it is it is revolving line usage ratio or percentage. So what you can do is you can just add up the limits on all of your credit cards and lines of credit, like all of your revolving lines. And so let's say you have 4 credit cards and a line of credit, and you owe $2,000 on you have a limit of $2,000 on all of them. That means you have total limits of 10,000. And then let's say you owe 1,000 on all of them. So that means that you owe $5,000 out of a total that you could owe of 10,000. And so your percentage is 50%. That's why I like to call it usage, because you're using 50% of what you could be. So if you can bring that 50% down to 30% or lower, then that would put you in the good category for credit. And then if you could get your credit cards down to 10%, using 10% or less, even zero is in the excellent category. So obviously zero is the best idea, because then you're not paying interest rates and things like that on the cards. And then, so what we can do with this information is we can, month to month, we can drastically change what our credit score is. Because if you go from 80% usage where your cards are kind of nearly maxed out, down to like 30% or 10%, that's going to be a huge increase to your score, right? And so this is kind of like how we win. So let's say that you need to finance a truck loan for your business or something like that, or you need a car loan for like a personal car. Then what you can do is you can pay down your cards and lines of credit, anything that's revolving, as much as you can afford. Obviously, don't spend your rainy day fund, don't spend your emergency fund doing this. But as much as you can afford to bring those lines down, you'll see a big increase to your score. Like if you went from maxed out cards down to 10%, your score would jump like 100 points. So it could be like a really drastic difference. So what you can do is pay them down as much as you can, wait 30 days, and then go apply for whatever you want. And what you're doing is you're applying for that credit product at the maximum potential score that you could possibly be at. So that's what I like about this bucket, is it's really the only one where you have a lot of control month to month on it. So we'll move on to the next one here, which is length of credit history. So length of credit history is essentially just age of your credit, and it's an average of all of the accounts, the ages of all of the accounts. So for people who are new to credit, like maybe your son or daughter's 18, 19, or 20, just starting out, they essentially have no credit until they reach that 3 to 6 month mark. And then within 2 years, they're brand new to credit. And then 2 to 5 years, it's kind of average. And then 20 plus years, you're in the excellent range. So this is kind of why an 18-year-old can't have a 800 score, as an example. And so the next bucket here is new credit. This only makes up 10%. And what this is inquiries, otherwise known as hits or pulls. So there's hard hits and soft hits. Soft ones are where a marketing department wants to get your credit score so that they can market you a certain product, maybe through the mail or through email. And that will show up on your credit report, which we'll talk about later. But it doesn't affect you at all. And it does not count as like an inquiry or anything like that. So it does not lower your score. Now, when you go out to apply for something, that's when the inquiry will be added to your credit report. And within a 2-year span, it'll count up how many times you've applied for for different things. And so kind of keeping this to below 10 is usually a good idea. And they do fall off after 2 years. But if you go to like a dealership or a broker, someone that's going to run your credit through 10 different banks and credit unions, then you'll see that your credit will have 10 inquiries on it. But those were all ran for the same purpose of like an auto. And so they'll be on your report, but they only count as one inquiry for the purposes of like lowering your credit, right? So it is a little scary because your list starts to get a bit large when you buy your car at a dealership instead of like visiting your credit union or bank first, right? So yeah, just know that just counts as one. So the last one here is the types of credit in use. This is just a mix of credit. So there's two sides to a credit coin, which I like to let you know about. Is there's installment loans, which are going to be auto loans, mortgage loans, anything that has an end date where you know for sure when that's over. That's an installment loan. And then there's revolving credit, which are like credit cards, lines of credit, and things like that, which are kind of like this endless system where if you charge 100, then pay 100, then it just allows you to, charge it back later, right? It's because it's revolving. So yeah, it's just having a mix of those two types of credit here is what this bucket's all about. So I'll talk about folks that are new to credit and kind of some ways to either rebuild or to get this bucket going, right, if you don't have both. So we'll discuss that in a little bit. So let me get back to the presentation here. And we're going to talk about credit reports. So on a credit report, you can quickly tell which accounts are still open and which are still closed. You can see if you made any late payments. Usually it'll have the numbers like 30, 60, 90. And then you can see if credit companies have pulled your credit report, which can happen when you apply for an auto loan, or if like a company's trying to sell you the card, like we discussed before, the soft pulls. And another really great benefit is you can kind of prevent identity theft with your credit report, because it's going to show you every name that's ever been reported in your name. So if you have like a bunch of aliases or something, or if there's potential identity theft, you may see other people's names on there. You'll see every social security that's ever been connected to you, and date of birth, essentially all the like phone numbers, addresses. So it can be one of the first steps is seeing your credit report to see if possibly you've been like a victim of identity theft, right? So let me flip over here. So these are the three credit bureaus, and we'll talk about a really great website later called annualcreditreport.com, which is right here. And so Equifax, Experian, and TransUnion. Wanted to show you the three bureaus so we can get into back to the presentation here and why the score matters. So we did discuss this a little bit about how it can save you essentially thousands, tens of thousands. If you have bad or mediocre credit, you essentially pay more for things like auto loans. And then with good credit, you can save money on interest for everything: home loans and auto and life insurance, homeowners insurance, and then you could potentially even secure that job you have always wanted, because employers are checking credit a lot more now. Generally, they don't really care about the score. they're more looking for fraud, but I have seen some that are unfortunately looking at the score. So it can affect that as well. And then if you're trying to rent an apartment or something like that, landlords do check that. So it could affect kind of where you can rent as well. And so improving the score. So we discussed this a little bit about how you can pay down cards to improve your score. Another thing you can do is essentially just, paying all bills on time, not closing down old accounts. So actually, I get a lot of questions about this. So after this one, I'm going to check the chat to see if there's any questions yet. But so closing down old accounts. This one's interesting because what I see is somebody will have like a credit card that they used to rack up flyer miles on that's costing them $300 a year because it has like a $300 annual fee. And so whether or not that person should close that card, generally they just should, right? Because that's $300 a year that's going out and they haven't received rewards from that card in a few years because they stopped using it or something like that. But it does depend on your situation. So if let's say you have two cards, each one of them has a $5,000 limit and you owe 5,000 on one of them and you owe zero on the other. If you were to go out and close that card that's at zero, your usage would go from 50% to 100 because you would owe 5,000 out of a 5,000 limit. And your score, your credit would drop like 100 points. It would be a huge. Oh, somebody raised their hand. All right, let me see if I can check the chat here. Oh, here we go. So we did get a question. Is it a good idea to add children to your credit cards when they are when they are young, so when they get older, they will have a favorable credit score? Yes. So if you're adding them as a user, not as like an owner, but like as an authorized user, then it's a good idea. They are technically not allowed to be authorized users until they're 18, and so but yeah, that's a great idea, especially if you keep that card at a zero balance or close to a zero balance. That's excellent because the way that credit cards work, a lot of people think that you need to get into a ton of debt to build credit. And that's just not the case because when you have a credit card at a $0 balance and a month passes, you will on your credit, you will see a $0 payment, green marks, and you'll see that you built a month's worth of credit by doing absolutely nothing on that card. Not even using it. So so adding your children to a card that you very lightly use is excellent because the problem is to them, that card that you added them to is their only card, which means whatever balance you add to it, that changes their usage percentage up and down, right? So that's why it's just kind of good to add them to a card that's kind of lightly used. That way their usage is always kind of in the excellent range to build their credit. Excellent question. And then I've got another one here. What about closing department store cards that we don't use since my bank cards give me rewards? Yeah, that's an excellent question. So there's three things that you would want to watch for. Is closing the department store credit card going to affect your usage percentage, right? Like the ratio of how much you're using versus how much your limits are. If it's not going to affect it that much, then you need to see, is the department store credit card my oldest credit line? If it is your oldest or one of your oldest credit lines, then I wouldn't close it unless it's charging you an annual fee. So those are kind of the two things that I would look for is yeah, kind of how old that credit line is, and you'll be able to see that on annualcreditreport.com, which we'll talk about a little bit later. If you know when you pull your oh yeah, so so you they pay all of their cards off each month and have no balances on any. So absolutely, then that's okay. Closing down, yeah, closing down that card's okay. Yeah, a lot of people just do a blanket statement of don't close any cards ever, but that's because you kind of have to get into specifics to know, whether or not a card can be closed. So yeah, really good questions. I'm going to answer questions throughout the presentation, so feel free to ask any, but let me get back into the presentation here. All right, so we covered closing old accounts, and then not opening a flurry of new accounts is an excellent way to improve your score, because once you get into like the 10, 15, 20, then it starts to become a warning sign for lenders, and they're wondering, why are you why are you applying for 25 things in a 2-year time span, right? And I've done it before, to be honest, because I went to got my car at the dealership, and that was like 15 right there. Only counts as one, but it's still, like when I pulled my own report, it still showed 15 of them. So yeah, just watch out for that. And then paying utility bills. This is a really interesting one. So wireless phone payments, and then managing checking and savings accounts. So actually none of this used to matter at all. So people who didn't really believe in who checked out of the credit system, they would have no credit score because they had no credit cards or any like loans or anything, right? And so that was really unfortunate, because like in an emergency scenario, they would come in with no history of credit, and it was really hard for me to be able to help them with much. But they have changed that now with the newest version of the scoring systems, where they can actually look into checking and savings and how you're doing it, making sure you're not overdrawing. And then they can check utility bill and wireless phone plans, and they can generate a score based off of that. So even those of us that hate credit now are going to start having credit scores. Throughout this year, it'll probably build. So that's an interesting change. So I wanted to bring that up. And then becoming a credit expert. Let me flip to the next slide here. So one of the best things that you can do is just building a solid credit history with some of the tips that we share so far. And some of the best that you can do with a credit card, in my opinion, credit card is not for borrowing long-term, right? Credit card is for ease of use. You can swipe a card. You don't have to like run to your credit union or bank and apply for a loan every time you buy gas or something, right? So that's what a credit card's for. But if you're getting into long-term borrowing, you want to try, like, let's say you do owe 8,000 on a credit card as an example. You want to try to flip that into like a loan or something that has an end date, like a fixed loan, right? And the reason why is we want to try to avoid the minimum payment trap, or just the payment trap in general. It doesn't have to be minimum. And the way those work is the minimum payment on a lot of cards is 2.5% of the balance, the ongoing balance. And so it's very low. So let's say your minimum payment is $25 a month. but each month you're buying, let's say, $25 worth of gas on that card. So you've got your minimum payment you're doing, and then you're charging up 25 back. Okay. That means that you're on an endless loan cycle with no end date. So you could be paying that card for 15, 20 years, 25. You could be paying that card for longer than your house if you're on this trap, right? Because you're charging on the card that you're using and paying at the same time. So it can get a little confusing there. So what I would recommend is either do a consolidation loan to convert that card into a loan, or pay well over the minimum and stop charging on the card. Maybe use like a debit card for now or something like that. But yeah, either one of those options is fine. Just be careful, because the credit card traps are pretty tough. So let's talk about some signs that you may have too much credit. So if you're only making minimum payments, that could be a sign. And in that case, it might be good to do some sort of like consolidation loan with like a longer term, maybe doing like a 5-year consolidation loan or something like that. Or if you're at your or near your credit limits, that can be kind of a sign that that it's more of like time to enter debt payoff mode, right? Not knowing how much you owe is a big one. So it's always good to kind of just stay on top of where you're at on that. And then if you're getting calls from like collection agencies or something like that, then you want to just take a step back and start looking at kind of debt payoff mode again in that case. So let's talk about some pitfalls to avoid here. So biggest pitfalls, in my opinion, are things like pawn shops. If you're not handling them correctly, pawn shops, rent to own stores, or like debt settlement scams. There are legit versions of all of these three that I just said, but you do want to make sure that you're reading the fine print. A lot of them are all too real and can kind of end up stealing your financial future, right? So places to avoid can include things like payday loans. High interest debt consolidation loans are a big one too. Like for instance, the Arizona average for credit cards is 19 to 20% annual percentage rate, right? So if you're getting a consolidation loan that's like 25% or 26 with a super high term, like let's say it's, like a 7 or 8 year loan to make your payments smaller, that's fine that your payments are smaller, but the loan that's supposed to like help you with your credit cards is more expensive. So yeah, that's, in my opinion, that's a bit of like can be like a bit of a scam there. So just be careful for things like that. So I want to get into your rights and responsibilities here, and kind of what we can do to protect ourselves. Annualcreditreport.com is the big one. Because of the Fair Credit Reporting Act, specifically on personal credit, it allows us to check our 3 bureaus, Equifax, Experian, and TransUnion, once per year. And it gives you your full report except for your credit score. For your real credit score, you usually have to pay for that. You can use something like Credit Karma. Obviously, I'm not affiliated with Credit Karma, but it's just something I've like personally used. But Credit Karma is a simulated score based off of what they think the credit bureaus are doing. So it's not like your real score or anything. So you just give it plus or minus 10 to 15 points, whatever Credit Karma tells you, right? If you're a member at Arizona Central Credit Union, then you can use our CreditWise system that's on your online or your mobile app, And it's essentially the same. It's very similar to Credit Karma. It gives you access to your credit score simulated version, and your full report, all your negative and positive marks, and pretty much anything you can think of on there. So, and opt out right here. This phone number is really awesome. It's only temporary, so this allows you to opt out of like marketing things like mail and phone calls. So this is really excellent. I believe it only lasts for, and correct me if I'm wrong, but I want to say 3 years. So like you kind of have to do it every 3 years. There is a permanent method. It's pretty involved, the permanent method. So you can look into that by just Googling like opt out. And so yeah, just keep in mind that you can opt out of all the spam that you're receiving, right? So let's get into the bureaus. So Equifax, Experian, and TransUnion. And what I'll do is I'll give you this flyer, the one that we pulled out earlier, because it has all the phone numbers and everything. So I'll make sure to give you that after the presentation. So if you find any errors or omissions on your credit that you didn't authorize, you should contact one or all three of the reporting agencies. When you do contact one, you can inform them to contact the others, and they'll do that. So first, I'd recommend either doing it online through the annual credit report website, this one right here. Online, you can dispute things. However, then you want to send them a physical letter in addition to your online dispute. There's only a few things that I send letters to nowadays, and credit bureaus are one of them, because it gives you backup in the form of mail proof, like that you wanted something, because there's a lot of issues with the bureaus. There's like a lot of, the percentage of people that have errors on the report is very high, to the point where errors are almost the standard at these bureaus. So yeah, you just want to always be sending mail with this kind of thing. And if you don't want to, that's okay. You can just try to make sure you're always reporting any inconsistencies on there. And it could be a good step to file a police report if we're talking identity theft and you're trying to fix something, or if you find identity theft on your report. And then let me pause here to scan the chat here. Just to make sure that we're answering questions here. Okay, no questions yet. That's okay. So I want to talk about freezing credit. I always get this question. How can we protect ourselves, make sure that nobody's opening random credit cards in our names and such, right? So freezing your credit means that no one can apply for credit in your name, including yourself, unless you unfreeze the credit using the password or PIN that each bureau will provide you. You'll need to contact all three bureaus listed here in order to freeze your credit at all of them. So make sure to safely store the password and PINs provided, since these are required when you eventually want to go apply for something. So let's say you walk into a bank or credit union and you want to apply for something and you forget that you've frozen your credit. They'll let you know, hey, your credit's frozen. So can you unfreeze it and then come back later to apply for it, right? So that's what happens when identity thieves do the same thing. So without that password or PIN, they really can't open credit cards in your name or anything like that. And that's one of the big things that identity thieves do, is try to get free money from opening like credit cards or loans in your name. So that's why I like to bring up freezing the report. This is when I like to start talking about the business credit scores and the business credit bureaus. So I'm going to flip to an article by NerdWallet, and hopefully you can see this. So again, I'm not affiliated with NerdWallet or Credit Karma, but I really like them personally. You know, I use them for if I need to learn anything about finances with like uh, from their articles. I usually just type into their search bar at the top. They have a little search bar here, and I just type whatever I need, and I always find it since they have articles for everything. So these are the three credit bureaus here for on the business side. There's Dun and Bradstreet, there's Equifax, and there's Experian. And so we need to forget what we just discussed about rights and responsibilities, because credit business credit is not included in the Fair Credit Reporting Act, which means there's no free lunch with business credit. There's no annualcreditreport.com. Essentially, everything costs money, and it's a little bit more opaque. There's no Credit Karma or anything like that that can help you out on that end, but it can be a good addition depending on kind of what you're looking for. The reason why I didn't discuss business credit too much previously in the presentation is that, to be honest, most businesses will get by just fine using their personal credit as a personal guarantee on business loans, on business credit cards. But not everyone wants to do that, right? Especially if they have like an LLC company. Not everyone wants to use their personal credit as a personal guarantee, a backstop for these loans. To if the loans go bad on the business end, then they become your personal loans, right? So I want to talk about business credit. So Dun and Bradstreet is the big one, and then obviously these two are big too. But what you can do is, let me pull up this next chart here. So the number one reason why you would even want to start doing business credit is to keep your personal debt completely different, right? To keep everything super separate. Most businesses run on business debt that's backed by personal guarantee, like we talked about. And so the importance of your business credit score, it kind of depends on whether you'll need business credit products and want to keep things separate. So some business owners, like freelancers who do not expect to require or to have employees, or maybe to require significant capital, they may never need business credit cards or loans. But if you think your business might need financing or other types of credit in the future, then make checking, business credit a priority, and definitely take steps to build a healthy credit profile, which we'll talk about now. So again, if another big one, if you're seeking government contracts or like a small business administration loan, or your company may need to do business with multiple vendors, then you should definitely pay attention to maintaining a healthy business credit score. So the reason why is, as your business grows and grows and grows, and as you start acquiring all these like government contracts, the first thing they're going to do is they're going to check your credit to figure out kind of what rates to charge. Like insurance will figure out how much to charge you based on your credit and how much of a risk the business is to the insurance company. And so that's why it can be important for some of you. And I'm not saying it's important for all businesses, because it's not. So for instance, a carpenter with no employees may want to borrow money to buy equipment. A marketing professional with a few employees may be ready to purchase furniture and computers for like a new office. Or maybe a salon owner with subcontractors but no employees may want to buy instead of rent their commercial property. So really any type of business could benefit from a business credit card. So let me flip over to business credit cards. This is a big one here because what you'll find is not a lot of financial institutions report to commercial credit bureaus. On this chart, they do, right? Because this is kind of a chart of which ones do, and it's leaving out all the ones that don't. But as you can see here, does the issuer report small business credit card activity to consumer credit bureaus? Let's take Bank of America. No, they're not going to report your business credit card activity to your consumer credit bureau. Do they report business credit card to commercial? Yes. So that's interesting. Because again, like I said, I mean, it's pretty much just these that report to commercial. So I'll be providing these 3 articles to you and the 2 charts that were included in the articles. I'll also provide the handout flyer that we looked at as well. As you can see, every lender is very different. So I recommend asking these questions before going with a certain lender. If your goal is to get your business credit building, but the lender doesn't even report to commercial credit bureaus, then they're probably just not the right lender for your situation, right? So to start up your business credit profile, kind of as a first step, and this part actually is free, by the way, I recommend contacting Dun & Bradstreet and filing what's known as a DUNS number. It's a 9-digit number used to identify each physical location of your business. Dun & Bradstreet offers several different credit scores and ratings that can be used to access your to assess your business's credibility. Hang on just a second here. I got a question. I don't know if Hilda is allowed to speak or not, but if you can't unmute yourself, Hilda, if you could put your question in the chat.
Let me unmute her 1 second. Oh, she says, never mind.
Oh, okay. Well, if it does come back to you, or if you do have something, then I'll definitely get to it. We're nearing the end here. So yeah, we'll definitely get to it. All right. The initial filing of the DUNS is free, and then everything after that costs money, essentially, right? And so personal credit scores, FICO scores, range from 300 to 850, while business ones usually go from 0 to 100. So they're very different. And there's a lot of different ones. Like there's one that goes from 0 to 300. And to be honest, building business credit is so similar to what we discussed on the personal side. Making on-time payments to creditors, that's the best thing that you can do. However, one thing with business credit is vendors report to commercial credit bureaus. So like your Home Depot, your Lowe's, if they're like your vendor, they will report your payment activity to them. And the way that works is, let's say you have 30 days to pay Home Depot and you take 40 days to pay them. That would make your payment essentially like a 10, which means like you were 10 days late on that. And that's kind of how they report to. So that's how you can build like commercial credit. So some business owners wonder why they would even need, a business credit score other than what we discussed. And so I'm going to break it down to main reasons. Getting financing may be easier if you have this big, if you have this commercial credit score built up. So establishing a solid business credit score can help your chances of landing a small business loan, especially big, huge loans, if you're in like the millions of dollars, especially. And it can help you with favorable terms. Rates on insurance could be lower, as we discussed, and keeping things separate, keeping business and personal separate. So also borrowing power increases. So strong business credit can help you take out larger amounts. Well, I could actually go on for 8 hours on this topic, but fortunately for you, I have less than 1 hour. I believe that the three articles in the flyer that I'm going to provide you are going to be more than enough to fill your curiosity on this topic. So I'll leave you with one last thing on the business credit end before we get towards the end here. Um, Much of what we discussed already on how to win, right, regarding personal credit also applies to business credit. First step, file a DUNS number with Dun & Bradstreet. Make payments on time to vendors and partners and lenders, of course. Keep revolving credit line usage to below 30%, preferably 10%. Well, actually, preferably zero. Um, and then build your credit over many years. Don't apply for too many times for too many different business loans within a 2-year time frame. And so I'm going to pull up the chat here. Stop for a moment. Okay, chat looks good. All right, let's get to the next. So this is us. This is just a little bit about Arizona Central Credit Union. We're not here to make a profit. We're your friends and neighbors. Plus, I mean, the word credit's in our name, right? We're simply here to help you meet your financial goals and dreams. If we can help you save money, we'll do it. You may choose to visit the credit union's website or call us, or you can always call for an appointment to visit a branch. So let me move over to the final slide here. And that's it. I'll see if I can answer some more questions to start to wrap this up before 10 o'clock rears its ugly head on us.
Yes, appreciate it, Patrick. This was really great. While we wait for a couple more questions, any last minute tips that you could provide everyone, or any other resources that that you could think of?
Yeah, definitely. So um, if there's a lot of really good articles, if you're already a Arizona Central Credit Union member on CreditWise in your online banking, there's a lot of excellent articles that you can search through. If you're not, that's okay, because you have Credit Karma at your disposal, and you also have NerdWallet. In fact, you don't even need to create an account at these things to search the articles. So you can just hit this, you can just go to nerdwallet.com and hit the little magnifying glass, and then type in anything that you're having trouble with on the personal or business finance end. And most likely you'll find the article, because every time I've done it, I've been able to find um, kind of what I was looking for. Okay, so how do we get a hold of you again? Yeah, I think I'll just pass my contact information to you. Maybe we can, because we're going to email them the three articles in the flyer, right?
Yes, so everyone will receive the recording, all the articles that Patrick shared in our post-event email, and we'll include Patrick's contact information. If you have any follow-up questions or any personal questions that you want to get with him directly, we'll be sharing that later.
Yeah, I can help with anything on the personal or business credit, any questions that might come up on that end. And then the flyer that I'll provide you also has our phone number on there if if you need that. So yeah, you'll definitely have our information. And then chat has. Oh, thank you so much.
Awesome. It doesn't look like I haven't received any other questions on my end. Um, just great feedback coming in through the chat. So we'll be wrapping it up there, I believe. And any other questions, again, feel free to contact Patrick directly, and we'll be sharing that as soon as we end today's presentation this afternoon. We'll be sharing that with you all. So thank you again, Patrick. This was really great. love the information between personal and business credit. But with that, we'll go ahead and wrap it up. We'll see you next week. We have 3 wonderful workshops next week, so make sure to join us. More information will be shared with you all soon, and hope everyone has a great rest of the day. Thank you.
Thanks, everyone.